Hi, I'm Chris Wright, President of Wright Wealth Management Group. Today we're going to discuss non-correlated and non-traded investment strategies that are available to many investors here in the U.S. Many investors often ask, I would like to have some diversification outside of the stock market to be able to give me some additional diversification. When an investor starts to discuss how do I invest outside of the market and have an opportunity to make a reasonable rate of return, most investors or financial advisors start to think about some type of fixed annuity investment. But today we're not going to talk about annuities. We're going to talk about non-traded investments such as non-traded real estate portfolios and non-traded bonds. These types of strategies, though they do have risk, provide an opportunity for investors to create additional diversification in their portfolio away from the stock market. For instance, some of the best portfolios that may be available to investors, number one, might be a real estate portfolio that owns a group of Walmarts or Walgreens or CVS pharmacies. Because these investments are classified as maybe real estate investment trusts, there are suitability restrictions for those who participate in these types of investments. Investors that are looking to diversify into these non-traded types of investment strategies, there are certain restrictions that investors have to abide by. Namely, they have to have an investable net worth over a certain amount or have to have income higher than a certain amount deemed by the Securities and Exchange Commission. These investments, if someone does qualify to participate, do offer an investment class that is non-correlated to the market because these investments are held outside of the markets. For instance, if you could participate in a real estate portfolio that collects the rent from Fortune 500 or Fortune 1000 type of companies, you participate in the pool of that investment and therefore received a distribution rate. Let's say the distribution rate by the company is 6% annually. That means on a $100,000 investment, investors would receive $6,000 a year or $500 a month. Now, investing in a non-traded investment still has many risks that are associated with the portfolio, such as interest rate risk, the risk of a corporation not being able to pay their monthly rent checks, tenants who decide to leave or go elsewhere potentially could have an effect on the portfolio. So even though these investments are considered non-traded and held outside of the market, they still do have many risks that the investors have to be aware of. If the investor reviews those risks and reviews the prospectuses of those investments and feel that that investment is suitable for them, they then may want to invest a portion of their investment dollars in these non-traded types of portfolios. These portfolios include many different sectors of the real estate markets. There's portfolios that include storage units, investments that include different hotel groups, investments that include retail areas such as Walmart, Best Buy, Walgreens, CVS pharmacies, and others. There's other portfolios that may invest specifically in warehouses and distribution centers. These are really good strategies, and an investor can actually choose many of these different sectors of real estate to invest in to then have additional diversification. So not only can an investor diversify by having non-traded investments, but can also choose several different sectors of non-traded real estate areas to additionally diversify their portfolio. Many investors find that by having some of their assets allocated into the non-traded investment world actually helps to smooth out volatility within their portfolio. We know that the markets are extremely volatile and have been extremely volatile for about the past 18 years. But when we have a portion of our assets held in these non-traded real estate or non-traded bond investments, if the market goes up 2,000 one day or down 2,000 the next day, These non-traded investment strategies are held outside of the market, so those daily fluctuations do not impact the balance of the investor's account from day to day.